What's going on, folks? Happy Monday. This is Shadow Stars coming at you with another video. Today's video is going to be an update to a video I did probably almost 2 months ago in regards to giving a preview to AMC's Q4 2022 earnings. That video I did I think 2 months ago. I did some rough calculations, just projections, guessing how AMC could do for Q4, and I'm giving you an update because I said I would, and we have new information. So it's time to update that model, update that projection, and see how close was I, how far off was I, and kind of update myself, see where I think AMC will do, and just give some opinions as to how that might affect the stock. So without further ado, let's hop into it. So there's a lot of different sites that I use to just grab some initial figures from what potential analysts, what people in the industry are thinking about what AMC would do for earnings. So I use sites NASDAQ, Zacks, Earnings Whisperer. There's even CNN, Benzinga, MarketBeat, TipRanks, Seeking Alpha, Barron's, Wall Street Journal, Market Screener, Alpha Query, etc. There's so many different sites that report that'll give their quote-unquote estimate as to how a company would do for earnings. So what I have here is a table that, okay, it looks like I updated this back on November 29th, 2022. So almost 2 months ago. Grabbed some initial figures of what analysts were thinking in regards to earnings for Q4 for AMC. And then I updated that table today, going through these sites and seeing what has changed. So overall, the general trend is that not all the websites have updated their figures, but the few that did, the EPS, they're looking at it being a bit more negative. So now we know that since the ratings were done, since I pulled this information back on the end of November, we know that December came through, and we know December was a big month in regards to see the strength of how Black Panther, Wakanda Forever, how Black Panther 2 did, and the strength of how Avatar 2 would do. So that's some two big movers, a great indicator of and a mover of how earnings would go. And we see that in general, a lot of the EPS guesses, estimates, you see a lot of lower forecasts. You don't really see much higher forecasts pushing it up. The only difference I guess I could see is MarketBeat, with instead of a negative 6-cent loss, it'd be a negative 5-cent loss on the high end. And a lot of this, I would guess this figure will change because a lot of them might have not updated these calculations based on what the current shares of AMC are. So we know that AMC itself didn't really dilute. They're tapped out on how many more shares they can dilute. But we know APE has been diluting since the end of November. We know the APE sale, the at the market program, and selling APE. We know Antera is a big player in regards to that because we know the FPA. While we know that not the whole deal hasn't gone through yet, we're still waiting on that HSR waiting period, which I believe that 30-day period, the typical 30-day period, that should be finishing up probably within the next 2 weeks. So you could potentially see a prospectus giving some information, some more proxy material information in regards to when that vote would be, and some more information in regards to the proposals, and perhaps some more information about the potential conversion, what that conversion rate could be for APE to AMC. But nonetheless, my prediction, just to be 100% transparent, when I was doing the math back in November, I was thinking AMC would be doing around that 1.07 billion range for revenue. They would report a negative 13-cent loss. Since then, I have updated it based on looking at what domestic box office has done. So I'm thinking that plus minus 5%. I'm thinking average AMC revenue would be around that 905 mil mark. EPS would be around that negative 18 cents. And this is based on the share calculations of what approximately 516 million for Class A common stock AMC and approximately 702 million-ish shares, if I recall correctly, for APE. Those figures, I'm grabbing the 516 from the most recent 10Q, which is accurate as of September 30th, and I'm grabbing the current outstanding shares of APE based on the update we got from the 13D filing from Entire Capital, because they had to report a position since they held more than 5% of a voting class of a company. So if we take a look, I'll show you the breakdown of why I'm thinking how I got to this figure. So first of all, let's take a look at the domestic box office figures. We have all 4 quarters. We have the figures for that. We know that quarter 1, 1.3 bill, quarter 2, 2.3, quarter 2, 2.3, quarter 3, 1.9, quarter 4, 1.7. And if we take a look at the revenue, the total revenue that AMC has done, quarter 1, as a percentage of total domestic box office gross, 58%. Quarter 1, 50% for quarter 2, 50% basically for quarter 3, and I gave a generous increase in saying, you know what, it'll be 51% of the domestic gross. Some of that will be due to, let's say, this is just a minor bump. Just giving a positive spin, saying that, you know what, Cineworld is facing issues, so perhaps a couple more folks, they'd be going more towards an AMC. We know that Cineworld has been moving, especially in the past couple months. They've been shutting down theaters, so people aren't going to completely stop going to movie theaters. So, you know what? Alternative could be if they have a nearby AMC. So I'd say that they capture a tiny bit more. Not much, but just a slight little sentiment boost. So I gave them a 51% cut. Now, when we look at other percentages, look at admissions. What percentage of admissions revenue is it from their total revenue? Across the board, past 3 quarters, you're looking at about 56% of their total revenue comes from admissions. So I'm using that rough percentage, 56%. Similar story for food and beverage concession revenue. Now, if we look at it on a year-to-year basis, we can look at pre-pandemic years. We know that the admissions percentage, the revenue, total revenue of the company versus the total domestic box office gross, significantly lower, these pre-pandemic figures. So I throw that out and I still give the benefit and say, you know what? Let's follow the current trend of the last 2 quarters. Give them the benefit of the doubt and give them a little bump. So already into this rough estimation, rough calculation, I'm giving AMC a benefit, giving a little bump. Then from here, some cost calculations. We know the trend of how much film exhibition costs as a percentage of the revenue. So I have it right here. I would use that last 2 quarters, giving a minor bump, another benefit of the doubt. Let's say that the cost percentage, this film exhibition cost as a percentage of the admissions revenue, slightly lower than quarter 3, that it's improving, that AMC is getting slightly better deals. I doubt it, but giving a slight boost. Not much, but a little bit of a boost. Furthermore, similar story for food and beverage. This most like that 16% is giving more benefit of the doubt, saying that the cost of food and beverage will be a smaller portion of the actual revenue. I would think that going from quarter 3 to quarter 4 costs, we know that inflation has been increasing the last several months. As to how quickly or how impactful that is to a company like AMC, I don't know how they manage their contracts. I don't know how they're bringing in their food. I don't know what sort of contracts they have locked in. So I don't know. Is it price locked in for years? Is it done on a quarterly basis, semi-annual basis? I don't know. But you know what? I gave them a benefit of the doubt and said, you know what? That cost decreases for quarter 4. Let's say the margins, increasing margins, profit margins. So once again, I give a benefit of the doubt in the total revenue percentage. Benefit on admissions, little bit, food and beverage. Same thing for costs of film exhibition cost and concessions cost. Then from here, we have operating expenses, giving them also another minor bump, a little benefit. Why? Because if you look at the news, while AMC itself hasn't been releasing this as on press releases, you can see that AMC is making moves to shut down some of their movie theaters, some of the less profitable movie theaters. And we know that if we go through their quarterly 10Qs, their quarterly statements, they say that, oh, we're closing this many theaters, but we're opening this many, but the ones that we're acquiring, they're going to be performing so much better than the ones we're closing. So let's say operating expenses slightly decrease as we have a couple movie theaters being shuttered down versus the ones that are being acquired. So a minor dump down. So I'm giving them nearly $5 million to consider. Similar story, because you got less theaters that you're operating net, as you're closing down more versus the ones you're adding, pay a little less rent. And the depreciation, just doing a basic roundup, let's say 100 mil. So overall operating costs has gone down. Obviously, we know that if we add in all the different exhibition costs, the food and beverage costs, because you're going to be bringing in less people into the theaters, that's the thought, because if you look at quarter 3 to quarter 4, we know that domestic box office gross was less. Near what, like 150 million less from Q3 to Q4? So we know that they're going to bring in less admissions revenue. We know that they're going to bring in less food and beverage revenue. And we know that, hey, costs will be also down as a result. Corporate borrowings and the other fees, let's say we keep that across the board the same for the quarter. So that comes out to about $215 million in cash burn for the quarter. Use that 250 mil cash burn based on the number of shares that exist. That's where you get the EPS, the earnings per share. And I bet that as we wait a little bit, another, let's say 2-3 weeks, we'll get updates from these sites as they'll update their information, because I bet you these figures are not based on the most up-to-date outstanding share count. A lot of these counts are probably based on just that roughly 1 billion share count. So 560 mil of AMC, Class Common Stock Class A, 116 million shares of APE. And we know that that figure certainly does not hold true, because we know there's definitely been a dilution of APE. So that's where the calculation stands, and that's where I see it. Now the question is going to be, they've burned on average then Oops. The last 4 quarters, so the whole year, they burned nearly $900 million in 1 year. On average, burned about $225 million a quarter. The company is burning more money than they're bringing in. So what happens then? Well, then that means they're going to be using their cash. They're going to be using their cash equivalents. So the question becomes, how much money do they have left at the end of this quarter? We know that they had 684 million as of end of Q3, end of September. End of December, how much did they have? We know that 684 subtract the 215. I'll show you the math right here. Oops, it's a negative value, so let's do a plus. They'd be at 469 million. We know that they raised some equity through APE. They sold APE. We know the Antera deal. It hasn't gone, not all parts of the deal have gone through, so that won't be counted on the quarter report and the final ending of fiscal 2022. But we know a portion of that will have counted. If I recall correctly, that 60 million APE that Antera initially bought in December, that's about almost $35 million. So they'll have raised $35 million there. And any previous APE that they sold through their at-the-market program, they're offering whatever amount that they raised through that too. So, and also things you need to consider is the debt that they purchased, the debt that they purchased at the discounted rates, and they paid some of that debt off, so that's some money that they used. And other things such as that new theater that they, I believe, acquired in a former ArcLight Cinema up in, I believe, in that Boston area. So how much did they spend in cash to take that over? And we know that at the end of Q3, they mentioned that they had 3 new leases that were going to be, that weren't counted on Q3, but we should see that hit on Q4. So we have to see how much they spend in that lease, how much will their rent, how much will their lease payments go up. Those are all some factors. But nonetheless, you would expect probably that cash on hand value, I would guess, somewhere around that 525, 550 mil to be optimistic. So it's not, if you look at just a figure from 680, let's say 685 down to, let's say 550, sure, it went down. That number would be kind of semi-tricky because their net loss is greater. It's $200+ million again. But their cash levels, I bet, is something that's going to be pointed out and pushed to try to cover what that terrible net loss was. But nonetheless, that's just the figures that I'm seeing for quarter 4. And while I was doing this, you know what? I said, let's just run the numbers. What would be AMC's break-even point for a quarter? So I got to doing some more math, punched some more numbers. So I ran, using the same metrics, 51% of domestic box office gross. Let's say the domestic box office is 2.3 billion. So basically the same figures as quarter 2, 2022, 2.3 billion. But what I'm going to do is going to give them an even better benefit of the doubt. So the thought is operating expense, give them a 5% decrease. Operating expense, another 5% decrease. rent 5% decrease, and depreciation another 5%. They would need the box office to do $2.3 billion to finally have a net positive, to have a net earnings, net profit. Yay! Even after factoring in your corporate bond rings, you're finally making money. So now that's just on a quarterly breakdown. 2.3 billion a quarter. So what does that mean? 2.3 times 4. Oops. Let's give some more decimals. So what does that mean? You need that. If you have 2.3 billion every single quarter for the next 4 quarters, so Q1, Q2, Q3, Q4, you would end the year at 9.2 billion. So how does that line up with the current projection? Now remember, I've done the math already to show a 15% growth versus 2022 and a 25% growth. A 25% growth versus previous year for every single month across the board. That gets you to 9.2. So every single month, you need a 25% better performance than last year. That would get you there. That would mean you're basically break even. Maybe a slight profit. That'd be amazing turnaround. But that 9.2, that's greater than 80% pre-pandemic. That 9.2 would be on par to that 25% growth that Adam Aaron was expecting. So you have to consider what the previous months, what the current month has done to see. Q1, what is the expectation? If you need to do 2.3 billion a quarter, what's that average out to? If you do the math, 2.3 divided by 3. You need to do 766 million every month. This is updated January figures. They're at 472 million. We pull up that previous figure, 766. They need roughly 300 million more, and they only have how many days left? 6, 7, 8, 9. They got 9 days left in the month. Will they be able to do 300 million more in 9 days? That seems unlikely. We can look at pre-pandemic figures. Quarter 1 to do 766 million. Sure. Pre-pandemic, some months they definitely had. January, yes, easily. February, not as much. March, definitely possible. But that's when they're at full pre-pandemic levels. We can't expect February and March to be at pre-pandemic levels. So we know that going into Q1 2023, that they're not going to hit that 2.3 billion figure. So what does that mean? They're not going to break even for Q1. We know that Q4 will have burned $200+ million. We know that Q1 hopefully will be better. Q1 2023 it will be better than Q4 2022. But we'll have to see. Right now, we're at 472. If they're able to do 600 million every month, that puts you at 1.8 billion. 1.8 billion, basically on par with Q4. That would net you another basically $200 million loss. that will get you dangerously close to your minimum liquidity requirement under your debt covenant. So what does that mean? That means most likely more dilution is inbound. That all wraps into what my second part of the video will cover. The whole situation of voting for the proposals of the combination of AMC and APE, the authorization to allow for the combination because you need to increase the number of shares of AMC so that you could convert all that APE into AMC, to allow for the reverse split 10-to-1, and to allow for potential further dilution. So the second video is going to break down both scenarios, if the proposal doesn't go through and if the proposal does go through. But nonetheless, I'll probably cover in that other video too why I think the vote won't really matter. I'll show you the figures, the institutional ownership, to give you a thought as to why I think what retail votes, I don't think that it'll make a difference. But nonetheless, this part 1 video just goes over what I think earnings wise you can expect for Q4 2022 for AMC. Looking at roughly 900 million in total revenue. Q3 did 968 million. We know that the box office did less in Q4 versus Q3 2022. So I'm expecting less revenue overall. But I give the slight benefit of the doubt, saying that the cash burn isn't as bad because they might have been able to reduce some of their expenditures. But yeah, that, and then I showed you a potential scenario of what would need to be done for AMC to finally break even. So yep, if you like the content, folks, I'd appreciate it if you could hit the like. If you found this information good, I'd appreciate it if you could share it with other folks. Share it with folks who think you might need to see it, folks who might enjoy it. If you got any questions, comments, concerns, etc., leave them down below in the comments. I'd love to know, what do you like, what you don't like? Do you have any points to contend? Do you think that some of my calculations are wrong? Love to get some feedback. Remember, I'm not some financial analyst. I'm not some financial professional. This is something I'm just doing as a hobby. And I'll disclose again, I got no position in AMC at all. I don't have shares, don't have shorts, don't have any options. No one in my family has a position in the company either, AMC or APE. It's me too, no APE, no AMC. This is just something that I've been following over the past 2+ years. And it's just an interesting case study, basically, interesting thing for me to follow. And I'm basing this all on publicly available information. A lot of data that right off the bat, I showed you all the different websites I'm getting the analyst figures from. The box office gross from Box Office Mojo, the 10Q information right from the SEC Edgar website, or you can click on the same links right from AMC's investor relations page. But yep, hope you enjoyed. Until next time, folks, Shadow Stars out. Peace.